Get some more insight into the role on the central banks, what they're playing in the controlling inflationary pressures. We're joined by Gabriel Ehrlich. He is the Director of Research Seminar in Quantitative Economics at the University of Michigan in the wonderful borough of Ann Arbor. Thanks for joining us today, Gabriel. I certainly appreciate it. A lot to talk to. I want to start by talking about the U.S. Trying to cope with its inflation problem. Give me your thought on these latest numbers. And we've been talking about it so long at this point, it's really not a huge surprise, even though it's very sobering.
That's right. It's not a huge surprise, but there's no way to spin it. Today's inflation report was frustrating news. All items inflation came in at 7.5% year over year. That was the fastest rate since 1982. And even if you strip out food and energy prices, because they can jump around, core inflation was 6%.
Yeah, it's pretty significant. Break down the numbers. Where are consumers feeling it the most? And the central bank has tipped its hand, indicating a rate hike is coming. What do you think we're looking at, even beyond perhaps the next meeting of the Fed? How will rates move throughout this year?
Well, inflation was widespread across categories, and that's one of the concerns, is inflation is becoming more broad-based across the economy. If you look at the numbers, food, energy, and vehicle-related prices did contribute an outsized part of the increase in prices, about half. Mm-hmm. And one small piece of good news is we might finally start to see vehicle prices start to slow down. But we do see rents rising as well, and we don't expect that trend to slow down anytime soon.
Yeah, that's interesting because recently in the U.S., the average price for a used vehicle, $29,000. But let's look at other nations. How is U.S. inflation, the rate here, comparing to other nations? Now, we talked about China. It has warned the United States against increasing rates too rapidly, fearing rather it could trigger a global slowdown for the economy. But let's talk about other nations.
Well, inflation in the United States is really the highest among the big economies. Inflation is high in Europe. It's just a tad above 5%. It's also high in the UK, but it's highest here in the United States. And one of the issues is that some of the inflation that we're seeing reflects global factors like rising energy prices. Mm-hmm. But here in the United States, some of that is due to the red-hot economy that we've got right now.
Yeah, and that's really strange considering everything that we have been through the last couple of years. We're going to get to that in a moment. But let's talk a little more about overseas. I want to go through some numbers, what they are doing overseas to curb inflation. Italy, you talked about the price of fuel. Electric prices in Italy are up 50%. Germany's inflation rate is just below 5%, I think the highest since the 1990. Australia, record fuel prices again. We're talking about how these could dramatically rise, perhaps greater than others. The list goes on and on. So what can physically be done to try and pump the brakes on all this concern that is clearly growing across the globe?
Well, the ball really is in the central bank's court right now. So here in the United States, obviously, all of the eyes are on the Fed. And the Fed is set to begin raising interest rates. They're almost certain to raise rates this March, probably with a 50 basis point rate hike right now, which is bigger than the usual hike.
That's pretty significant. And how are people going to cope with this? What is it going to do not only to people in the United States, but if other central banks around the world kind of follow, what is it going to do?
It's funny because we're really seeing different central banks react differently this time around. If you look back to what happened following the Great Recession and the financial crisis, central banks really moved in unison in a way. This time, central banks are reacting differently, but I think that's because the circumstances are different country by country.
Interesting.
Yeah, so, here in the United States, we really brought out the big guns in terms of the fiscal support during the pandemic. And that's given us a strong recovery and a fast recovery. But of course, the downside of that is that we've had fast inflation also. So, here the Fed is certainly looking to hit the brakes this year. When you look at Europe, the European Central Bank isn't so sure because the recovery there isn't so strong.
Let's talk about also the disparity between the wealthy and the not so wealthy. People on the lower end of the economic spectrum tend to be affected disproportionately as this wealth gap continues to grow. Certainly that is playing into this as well. How are those on the lower end really going to have to balance all this? Where will they tighten their belts?
That's an important question. And one of the big problems right now is that wages are not keeping up with prices. So wages are rising, but not as fast as inflation has been rising. And that means when you adjust for inflation, people's real purchasing power from their wages is falling. And so consumers are feeling sour. And the index of consumer sentiment produced here at the University of Michigan is down to its lowest level in about 10 years. Uh, we do think, you know, that as consumers do need to tighten budgets, they'll start with what you might think of as discretionary items. Uh, if you think of trips, vacations, new car, things like that, before they cut into essentials such as food, rent, and utilities. But those are tough trade-offs to make.
Yeah, it really is. And we, in Owen's excellent story that led into you, he talked about how this has cropped up in the past, especially in the United States, looking at two specific times. And I remember Jimmy Carter, and he criticized Americans for having this malaise, and people would wear win buttons, whip inflation now. And we already have President Biden coming out saying he believes inflation is going to be corralled by year's end. Is that doable, or is that what a politician, a leader of the country, feels he needs to say in the face of significant inflation?
Well, we do expect inflation to start coming down by the end of the year. Not back down to the Fed's target, but lower than it is today. I do expect inflation to remain high in the near term, so over the next several months. But part of the issue has been the supply chain. The disruptions to the supply chain have lasted longer than I think anybody would have guessed at the start of these issues coming up. Here in Michigan, where auto production is very important, we do see that the microchip shortage is starting to improve. So I do think that we will start seeing the supply side improving by the end of the year. That should bring inflation down. And then, of course, the Fed is acting aggressively, or we expect the Fed to move aggressively.
But there's always something out there in the hinterland. I mean, we've seen what's going on in Canada with the trucker strike. If that spreads to the U.S., who knows? But that's another conversation for another time. Thanks very much to Gabriel Ehrlich, the Director of Research Seminar in Quantitative Economics at, again, the wonderful University of Michigan in lovely Ann Arbor, Michigan.